You're watching Masters in Trading Live with Jonathan Rose.
Hey guys, it's Jonathan Rose. I'm here at Mercury. Welcome to Masters in Trading Live. Masters in Trading Live, I get on here each day the market's open, 11 a.m. Eastern Time. Go over the market, share some thoughts. Once in a while, we'll share our trade of the day. So I've done nothing but trade for the past 27 years. Been in Chicago. I've traded at all the major exchanges, Chicago Board of Trade, the Chicago Mercantile Exchange. What is the other one? The Chicago Options Exchange. So been all throughout Chicago, traded at all the exchanges. We are live. We get on here every single day to add as much value as we possibly can. So I got the chat open. We always get on about 10 minutes early, say good morning to everybody. We have a handout today in the chat. We have a handout for you to access. My managing editor, Chris, put the link in the chat. So I'm pretty sure you guys can all access that. And let's go through it. Let's have some fun. All right, guys. We're going to start off here. For the last 6 months, we've been working on the Masters in Trading Challenge. And the Masters in Trading Challenge was finally released in the middle of this week. If you have not got a chance yet to watch the challenge video, I encourage you, go over to mastersintrading.com/challenge 2025. It's an awesome video, and it takes everything I've learned in options and simplifies things for you over a 7-day course. Really proud of this thing. We're calling it the 7-day challenge. Make sure you get a chance to watch that. Okay. Oil super strong, right? Oil super strong, global unrest. So therefore, our long oil positions are going to work out. We have a long oil position in XOM that we took off this morning. I'm going to show you the exact trade. The trade that we first shared in the Discord. Where's Mr. Penn? There he is. So the trade that we first shared in the Discord would be on May 20th. Today is June 13th. So about 23 days ago, we were buying the 108 calls, which are right here. And we were buying those for $1.79 with XOM rallying nice and strong. These have traded up to $7 today. So a big glockenspiel for the folks who were able to take advantage of these trades. So Tom, wowee. Tom nails 1,000% winner on XOM. Josh, 666% winner on XOM. Dale got out for 50%. James was able to take $50,000 in profit and $13,000 as well. That's $63,300. And then Kevin here able to lock in 341%. So great job. We've had a few 100% winners this week. XOM was another one. Although once in a while I see something in my Discord that's so funny that I just need to share. James took the recommendation to get an XOM to lock in his 40K. This was just too funny. Tom, wow, I thought I got the high, but my system is slow. I use Bank of America on the website, a horrible way to trade. Kudos for you, James. But Chris wrote, have you, maybe you have the yips. I've been there. Have you tried sacrificing a chicken? So this was funny. This happened in our Discord. I just wanted to share that chuckle with all of you. But really good job with that XOM trade, guys. Love it. Congrats. Okay. Inside or in the chat, there is a handout. And the handout looks like this. So in the chat, you can access this handout. It looks like this. The intention of this handout is for you to print it out and keep it next to your computer. Okay? I'm going to explain exactly what all this means. options have time decay, right? So if you have an option for 9 months, it has time decay over time, right? If you buy an out of the money call, it's slowly going to lose value. And the reason why it's going to lose value is because of that time. If a stock's at 10, the $15 call with 9 months to go until expiration, that $15 call might have a little bit of value. Maybe there's a chance that that $10 stock trades up to 15. But with 1 month, it's probably not going to have a lot of value. Now, this list shows you the ETFs that have massive decay. Now, earlier, those calls that we just talked about have decay. Well, if you buy calls on these names, not only do the calls have decay, but all of these names have significant decay. Here's the reason of why they bleed. You can go through that, or you can just give me the benefit of the doubt. And trust me that these names we don't ever want to buy calls on, okay? Because not only are the options going to decay, also these products are going to decay along with it. So I have some more slides here just to walk you through. UVXY. A lot of people like to trade the UVXY. The Pro Shares Ultra 2 times VIX short-term futures. Here's what UVXY looks like going back to the beginning of the year. It's pretty much right at where it started, but it rallied, it fell off. April 2nd, Liberation Day, we got really volatile. But my point that I want to show you guys is over time, these products are going lower. If Microsoft has equal supply and demand, and Microsoft's trading $450, if there's an equal amount of buyers and sellers, Microsoft is going to trade $450. That's where it would stay. But with a product that has natural decay, the Microsoft example with an equal amount of buyers and sellers, that Microsoft's going to be at $450 and slowly trade lower. So on the screen, you see UVXY slowly trading lower for the year. But what happens if I look long term? That's the UVXY contract going back to July of 2020. That's only 4 years. If we go back 20 years, it looks worse. But all of these names, if you look at them long term, they are garbage. Garbage. Okay? It's a really important lesson. For one, I prefer you don't trade these stocks. In our Discord, in our community, we have quite a bit of paid programs where I'm sharing trades. I don't share trades in these names. UNG a little bit, but we're looking to buy puts in UNG. We don't want to buy calls in any of these names. And UVXY would show you as a great example. Here, I have another one for you. UNG. Here's UNG from the first of the year. UNG is natural gas, okay? It's a U.S. natural gas fund. Over time, contango and backwardization, that's when the front is going to be higher than the back. So if there's like a pricing over 3 years and an oil contract, there's a front month oil contract, which is 1 month, say, and then there's a back month, which is 3 years away. If the front is way higher than the back, that's contango. And if the front is way lower than the back, that's backwardization. I hope I didn't miss those up, but that's what that means. UNG. Here's it over 1 year, but again, Look at UNG if we go back to 2015. Think of it like a sailboat where the wind's behind your sails. On the downside, the wind is fiercely behind your sails. If you try to buy these things, you are running uphill. You're sailing into the wind. Okay? Does that make sense, guys? Can I get a show of hands? Are you guys active in these names? Hopefully not. What I always tell people, if they suggest like, hey, let's do a trade in the SQQQ, rather than doing 3 times, I'd rather trade a little bit bigger and trade the normal QQQs. Okay? Stay away from these highly leveraged, financial engineered products. That's my big takeaway for you. Buy puts on opportunity. Don't just buy puts. You know, if we look at UNG, when we talk about buying puts on opportunity, we're waiting for the rally. Here's our expected move charts. When UNG rallies, we have a higher propensity to buy puts playing for it to break. Okay? It's a really important lesson, guys. And I've seen this mistake so many times where people come and try to buy these things and try to play on that big 3 times leverage, thinking that they're going to get the up move, but they're not. These things leak, these things drip, and certainly go lower over time. That's what I got for you guys today. Thank you so much for joining. If you haven't yet gone to masterthintrading.com/challenge 2025, check it out. We worked really hard on this, and I believe this is the way for anybody with a novice or no understanding of options to learn options in a very, very short period of time. Everybody else, guys, if you're in our all access, you guys hang tight. We're going to go over our portfolio. Thanks for watching. Yeah, cool, Aaron. You know, we like to say education mitigates risk. We want you to just know about this stuff, and that's the big reason. Education mitigates risk. You continue to learn, and you'll be a better trader over time by just eliminating some of these little mistakes. Okay? Thanks for watching, guys.
Join us